We need to talk about the velvet rope in finance.
Yeah.
For decades, if you wanted real fiduciary advice, someone legally bound to act in your best interest, you needed, what, $500,000 in assets?
At least, yeah, minimum. Below that, you were kind of stuck.
Exactly.
Yeah.
Stuck with expensive mutual funds or just a basic bank account. But today's deep dive is about how that wall is. Well, it's crumbling.
It really is.
We're looking at this huge structural shift where AI is bringing institutional grade wealth management to really anyone with $10,000 or even just 50 bucks.
It's a fascinating turning point. We used to call this the advice gap. The wealthy could pay, say, 1 or 2% in fees for these custom strategies to cut taxes, boost returns.
While everyone else just had to guess.
Exactly. And now AI is democratizing that.
Yeah.
And the timing is critical because of the great wealth transfer.
Right, millennials and Gen X are inheriting trillions, but they don't have that traditional relationship with a financial advisor. Frankly, they don't seem to want it.
Do they want software? They trust the algorithm.
Okay, so let's clarify the tools, because AI is a term that gets thrown around a lot. We're really looking at two main categories here, right? The allocators and the analysts.
That's a great way to put it. The allocators are the ones we've known for a bit. Your wealth fronts, your betterments, they're the autopilot.
They do the asset allocation, rebalancing, all that mechanical stuff.
Exactly. Then you have the analysts. This is newer. Think of AI co-pilots like Magnify, where you can literally ask it in plain English, show me stocks that do well when interest rates fall.
Wow. Stuff that used to require a Bloomberg terminal on your desk.
For sure. But the real disruption, I think, isn't just the convenience. It's the math. It's the fees.
Yeah, this fee drag concept it's startling. A traditional advisor might charge 1%, a robo-advisor charges maybe 0.25%. That 0.75% difference sounds so small.
It sounds like nothing.
But on $100,000 over 30 years, it adds up to over $135,000.
It's a massive number. That's money that stays in your pocket instead of paying for someone's office plan.
And the robo-advisors aren't just cheaper. They're doing things that humans literally can't do efficiently at scale. I'm talking about tax loss harvesting.
Ah, yes. This is the killer app. It's the alpha generator for the middle class.
So explain how that works.
Okay, so the premise is simple. Markets go up and down. Let's say you own an emerging markets ETF, and it dips 5%. A human advisor on a busy Tuesday, they might miss that.
Easily.
The AI sees it instantly. It sells the fund to book that loss, which lowers your tax bill, and then it immediately buys a substitute.
But you can't just buy the same thing back, right? There's that IRS wash sale rule.
Precisely. And that's the genius of it. The AI doesn't buy the same fund, it buys a cousin. So if it sells the Vanguard Emerging Markets Fund, it might instantly buy the Schwab one.
Ah, so they're almost identical in performance, but they're technically different funds.
Exactly. So you stay invested for the rebound, but you've harvested a tax deduction. The estimates suggest this can add about 1.8% to your after-tax returns.
Which means it's paying for the advisory fee multiple times over, and that leads to this other idea, direct indexing.
Right. It used to be you bought the S&P 500 as one big chunk. Now, the software can just buy you all 500 individual stocks.
And that matters because even if the whole index is up, some of those stocks inside it are down.
And you can sell just those losers. It offers this incredibly granular tax control that used to require like $5 million. Now you're seeing it for accounts with 100K.
Okay, but the math is only half the battle. Money is deeply emotional, especially something like an inheritance.
Oh, absolutely. This is the classic dilemma. The math says if you get a big chunk of cash, you should invest it all at once. Lump sum investing. It beats dripping it in slowly. Dollar cost averaging about 2/3 of the time.
But that is terrifying. I mean, what if the market crashes the very next day? The regret would be paralyzing.
You'd never invest again. So what these AI platforms do is they automate the psychological safety net. They'll take the cash, park it in high-yield savings, and automatically drip it into the market for you. It might not be perfect math, but it stops you from freezing up.
We're seeing that on the spending side, too. I looked into this AI budgeting tool called Clio. It has a roast mode.
It's hilarious. It literally shames you if you spend too much on Uber Eats.
Yeah.
It's gamification for your budget.
Right. And then there's autopilot savings, where the AI just sweeps any cash above, say, $3,000 in your checking account straight into investments.
It just removes the temptation. It makes saving the default.
This all sounds incredible, but we have to talk about the risks. You're handing the keys over to an algorithm.
And that's a real concern. With generative AI, the big one is hallucination risk. These models are probabilistic, they're guessing. You should never, ever ask a generic chatbot for specific tax advice.
Because it might just make something up, but say it with total confidence.
And land you in an IRS audit. Exactly.
And looking forward to, say, 2030, the sources were pointing to this idea of agentic AI. That feels like a whole other level.
It's the shift from advice to action. So today, an AI might suggest you switch your car insurance to save $50 a month.
Right.
An agentic AI will just do it. It'll find the better deal, cancel your old policy, sign you up for the new one, and then invest the $50 savings for you.
Yeah.
All without you lifting a finger.
That's a huge leap. We're moving from a black box where Wall Street was a total mystery to a glass box where everything is transparent but automated.
That's the future. Complete automation.
So here's a thought to leave you with. We're all getting pretty comfortable with an AI analyzing our wealth, but as we head towards this agentic finance future, are you ready to let an AI not just advise you on a decision, but actually execute it for you without you even pushing the button? Thanks for listening to this deep dive.